Okay, so here's the NASDAQ 100 on the daily, and I'm using broker name is JAFX using a demo account, and immediately I noticed this pattern yesterday and was following it, and boom, popped in my mind. I said, hanging man, that looks like a hanging man because this looks like a platform here, and then you have this pattern. You have this candlestick up here all by itself, just hanging there. And today in after hours, the U.S. market has not opened up yet. Um, we're looking at the next pattern, the next candle. So we need to determine whether this is an actual hanging man pattern candle. So let's look at some websites and determine. So this is a daily time frame. You have a small body. You have um, you have a tail going down to there, and you have a tail going up. Now, to me, that looks like a guy's head. That looks like his body, okay, and that looks like the, you know, top tail. Well, maybe that's the noose or whatever. But let's see the actual technical analysis behind it. Okay, so they even have in Wikipedia, they have hanging man candlesticks pattern. So it used to be before you couldn't find too many articles on candlesticks, and now they're even in Wikipedia, but it's not very comprehensive. Okay, so we're going to go to another website because Wikipedia just is not very extensive. Okay, so let's try baby pips. Hmm. Okay, hammer and hanging man. The hammer and hanging man look exactly alike but have totally different meanings depending on past price action. Both have cute little bodies, black or white. Okay, my charts aren't black or white candles. They're red and green. So it says long lower shadows. So what they mean by lower shadows is the actual wicks, the tails here. So you could have a top tail, you could have a bottom tail, and in this case, the bottom tail is much longer in a hanging man, but they're showing it as to be identical to a hammer according to Baby Pips. It says both have cute little bodies, black or white, long lower shadows, and short or absent upper shadows. So the key to get out of that is the upper shadow or wick should be shorter than the lower wick. And then in a hammer is pounding up. So its position matters. You'll see a hammer will look like a hanging man, but it will be in a different position. It'll be at the bottom of a pattern because they use the hammer to describe like hammering up, hammering up and reversing to the upside. Whereas a hanging man occurs at the top of a pattern. So if we go back to our chart, there's definitely some characteristics, although the tail is pretty tall on this, okay? And to me, I think that's a variable. Well, what you have here that's really important is the size of the body and the position in the chart, and the fact that this gapped way up and it's just like hanging up there like in a platform. That's what made me think that looks like a hanging man. That pattern is hung. But we'll see. This is all in theory, and sometimes they work and sometimes they don't. So let's go back to the website. Hammer hanging man. Let's see if Baby Pip says more. The hammer is a bullish reversal pattern that forms during a downtrend. It is named because the market is hammering out a bottom. Oh, please don't show that woman. I can't stand her. X, thank you. When I'm voting Trump, okay? So don't show me that ad. I can't stand that Kamala or whatever her name is. Joke. When the price is falling, hammers signal that the bottom is near and price will start rising again. The long lower shadows indicates that sellers pushed prices lower, but buyers were able to overcome this selling pressure and close near the open. So what they're talking about is, so like, this is the open right here, because it's actually, because this is bearish, the open is right there. So the open was right there, the close was right there, okay? But the price went way down here, and then it went back up, and then it closed there in a bearish close. But it had went up, okay? So however that happened, it's hard to say, but it definitely, the candle opened right there, and it closed right there, and in between, the pattern went up to here and down to there with a lower, they're calling it shadow. Okay, I just call them wicks, and wicks are probes or tails. You have a probe going down in that direction, you have a probe going up in this direction, which is not as high, and you have a tight body. So no matter how you look at it, it is a decision candle because the body is not very big. So like this right down here, this, let's get rid of that horizontal line altogether. This right here has no body. That's a little doji pattern. It doesn't have any body. So it is a decision pattern. This doesn't have that big of a body, but it has some body. So it's not really a decision candle. I mean, it can be. Depends on your interpretation and what you know about the market. Back here is a decision candle because it doesn't have a very big body. It has long tails, which are probes. So those probes are looking for buyers when they go down. The probes are looking for sellers when they go up. Okay? Like sometimes you find them, like this one goes way up and it can't find buyers, so it ends up going down, and then you see this pattern. There's a probe going down, and excuse me, they can't find sellers. Did I say that right? It goes up looking for, maybe I said that wrong. I'm getting confused about the up and down of the pattern, but it's trying to support this price level but can't. Okay, the probe goes up looking in the up direction for price support up here, but it gets shot down. So I call them probes looking for the price. Okay, and in this case they're looking for buyers down here. In this case they're looking for buyers up here. Instead they got sellers. Okay, so the price went down. And in this case they looked for buyers down here and they got them, and the price went up, if that makes sense. So actually I guess you could say it looked to see where the sellers were and got shot down, so it sort of makes sense. But anyway you look at it, when you see a tall tail, they're probes looking for buyers or sellers to see the price action. So let's look up some more information on candles about hanging men. Or if you looked at this inversely, if this was at the bottom of the pattern, it could be a hammer. Maybe the body is too big for a hangman, but that's up to interpretation. You could look at the size of the other pieces of the puzzle in the pattern and decide, is that smaller than most of the other candles? I would say it is on the most part. It is smaller than most of the candles. So there's definitely something going on here. It's deciding. There's not a lot of support to go down. There's not a lot of support to go up. So it's just kind of like in this area. So it's confused. The market is confused. So let's read some more. Okay, it says the hanging man is a bearish reversal pattern that can also mark a top or a strong resistance level. When price is rising, the formation of a hanging man indicates that sellers are beginning to outnumber buyers. The long I have to pause the video because the damn bug's about to fly in my mouth. Or do I? Okay. When the price is rising, the formation of a hanging man indicates that sellers are beginning to outnumber buyers. The long lower shadow shows that sellers pushed prices lower during the session. Man, I hope that bug didn't fly in my mouth. Okay. The long lower shadow shows that sellers push the prices lower during the session. Okay. Okay. Bug, do you have anything to say about this? Okay, he flew off, so. All right. Buyers were able to push. I think it did fly in my mouth. It feels kind of funny. Oh well. Jeez. Here I am, a vegan, and you just cannot escape carnism, so I have to stop and take a drink. It was just my imagination. I still see him flying around, unless it's his brother or cousin or something. But he's about to get slapped here in a second. Buyers were able to push the prices back up some, but only near the open. Okay. This should set off alarms, since this tells us that there are no buyers left to provide the necessary momentum to keep raising the price. Okay, so let's look at it again. So you see it opened here and closed here, and like it was saying, the price went down and then it went back up towards the open, but didn't go all the way up to the open, you see. So the pattern ended, and I believe it would still be a hanging man if the body was up here and it closed with a green bullish candle and had a long tail. It'd actually be more distinguishable as a hangman. So I'm even going to say, even that if price goes up here, that it's still going to indicate weakness on this move up in the NASDAQ. Okay, because patterns aren't perfect. They give us an idea of what's happening. Like, let's see if we could find, like back here, okay, this is a decision candle, but it didn't reverse there. There was some enthusiasm followed by a sell-off, but first you see some tight action. You see a probe up, and then you see a lot of buying, but the market's not having it, and it goes down. But before this happened, there was this decision candle. So this, to me, can still be a valid reversal signal. And another thing is we have this gap up. Okay, this is a weekly gap up. Okay, because the opening of the market was a Monday. Okay, so it's not just a daily gap up, it's an actual weekly gap up. So weekly gap ups are different than daily gap ups or monthly gap ups or intraday gap ups. So let's keep reading, because everything has a different interpretation and can be viewed differently as well. So there's no perfect way of doing this. So, okay, it doesn't say much more. I think we get the idea from baby pips. I'm just going to close them out and see if we could find something else that will help us in our research to understanding the hanging man. And it even if it's not a hangman, we're going to study this to see, so we learn about the hanging man. Maybe it's not a hanging man. Maybe it is a hanging man and it's going to fail though. So we're going to study it. The Hanging Man. Okay, this is by Investopedia by Daniel Kirk. Written in November 25th, 2019, so it's relatively recent. But you have to remember, candlesticks, the history of candlesticks go back. I'm going to look it up later, but they go back before the internet was even invented. Japanese would write on cloth of some sort, whatever they wrote on back then, and would draw out little candlesticks to determine the price of rice, believe it or not. So the hanging man, it says, the hanging man, they probably invented this hanging man. The hanging man is a type of candlestick pattern. Candlesticks displays the high, low, opening, and closing prices for a security for a specific time. Candlesticks reflect the impact of investor emotions on the security prices and are used by some technical traders to determine when to enter and exit trades. Now, if you just look at the chart, this is why I don't read the news. I just look at charts to read emotion. You could see this gap up is something that deals with a lot of emotion, because if you're in this, you're trading, or you're an investor, or you're an economic policy person for the government, okay, and you see this gap up in price, it's hard not to feel the emotion, okay? And in this case, it's enthusiasm. A lot of people are being left behind who are short, but then the price is also stalling out. So you have the pattern not doing much after the gap up, which could be viewed as a signal of top, a signal of weakness, a signal of euphoria. Okay? So, but then again, it might not be, but it's hard not to not notice that this is clearly, whether it goes up or down, if you're watching this is a huge emotional thing that you could see on the chart without even reading the news. That this huge difference from the rest of the pattern, because it has been going up and then it's like a volcano erupting here, okay? So it doesn't mean it will go down, but this is a signal, if it is a hanging man, that it's a top. We'll see if it's a top or it's not a top. So I already read that. We're going to look down. The term hanging man refers to the candle shape. Okay, so it looks like a guy's head or a female's head. Let's not be sexist here. You females get hung too. As well as what the appearance of this pattern infers. The hanging man represents potential reversal in an uptrend. Okay, so the reason, remember, we call this a hanging man is because it's at the top of a trend, as opposed to a hammer. A hammer looks similar but is at a bottom of a trend. So you do not call a hanging man at a bottom of a trend. While selling an asset solely based on a hanging man pattern is a risky position, many believe it's a key piece of evidence that market sentiment is beginning to turn. The strength in the uptrend is no longer there. Okay, one more time. While selling an asset solely based on a hanging man pattern is a risky position, many believe it's a key piece of evidence that market sentiment is beginning to turn. So it's not the only reason you would think to short this market. In other words, the strength in the uptrend is no longer there. Perhaps. It's not saying for sure, but it's a clue. The hanging man explained. The hanging man occurs when two main criteria are present. The asset has been in an uptrend. So let's look. Has the asset been in an uptrend? Well, yeah, let's zoom out. I would say that's clearly an uptrend. Let's zoom out some more. Well, yeah, the asset has clearly been in an uptrend. Okay? And this does not mean that it will stop being in an uptrend, because as you can see, it has been in an uptrend for quite some time, and there have been pokes higher like this. But the key here is that this is also gapped up. Okay? This is gapped up right here. That gap may be another piece of the evidence to signify that this is a top. But it doesn't mean that it is. It still doesn't mean that it is. There's other types of gaps. There's if it's the top, if it's a top gap, top of the trend gap, it's an exhaustion gap. But it could be, they also have runaway gaps. So we're going to have to look into all that stuff and understand it before we decide, as there's new information coming in, and it could all turn out incorrectly. And the market is trading right now in pre-market because this is 24-hour data that I'm looking at through JAFX is the broker that I'm using. I use several brokers, and I have to double check which one I'm looking at the time, because I sometimes forget. I use about 3 different MetaTrader brokers, and I also write my own indicators. So I'm not a candle expert, so I'm looking up candle trends. Possibly I'll write a candle system, but my systems work as they are, and I only use candles when something really strikes out at me like this. So that's why I'm looking this up, because I want to see if it's verified. So the asset has been in an uptrend. That is an uptrend on the NASDAQ 100. The candle has a small real body, distance between the open and the close, and a long lower shadow. There is little or no upper shadow. So, okay, let's look at that. So, do we have in comparison to all the other candles, is this candle smaller? The body? Is it smaller than most of those candles? I would say, yes, it is. And where it occurred, has it occurred at the top of a trend? I would say, yes, it is. Is this tail longer than the top tail? Is the bottom tail, that's what they're talking about when they say shadow? Yes, it is. The only thing that I see that may disqualify it as a hangman is the fact that the top tail is kind of on the long side. But that, I don't think disqualifies it. Okay, it would look like more of a hangman if there was like no tail or just a little tiny bit of a tail. But if you took the top tail and you put it on the top, it would be like up here. Okay, so the tall tail, the taller tail is on the bottom of the body. So to me, that looks like the body of a person, and this tall tale might be a little bit of a fluke because um, sometimes everything's not perfect in a market. You know, if it was perfect, it would probably, the body would be like this size instead of that size, and the candle, it would have like no upper wick, it, or just like a little tiny wick like that. Then and it would have the same size wick on the bottom. Then it would be like a perfect hangman. But the position is key. The position at the end of a trend, I think that's the most important aspect in this case. It is the biggest clue. The fact that it also gapped up, which is going to cause some crazy price action, and you're not going to get a perfect hangman after a gap up, okay? A gap up and a hangman, all right? And look, you can see right now, pre-market, the price is having trouble trading above the the opening of yesterday, which is right there. It went above it for a bit, but it's down here. It's within the body. So it's showing, as it stands, there is resistance. There is indecision. If the market was really strong, it would just blast right through this. But we'll see. It still could. I'm not saying that it isn't. You just never know. We're just studying this. I'm not saying I know perfectly. I'm not calling a shot here. Given these two criteria, when a hanging man forms in an uptrend, it indicates that buyers have lost their strength, while demand has been pushing the stock price higher. On this day, there was a significant selling. While buyers managed to bring the price back up near the open, the initial sell-off is an indication that a growing number of investors think the price has peaked. So, Kate, what it's saying is that where this opened and where it closed, and the fact that the price went way down and had this long shadow, that the market doubted the price up here. The market doubted the fact that the market opened right there, and it decided to come down. So there is doubt in the market right now, which could later be followed by a sell-off because of this tail went down, and the market is worried. The market participants are worried, and some of them probably took profit, and now some others may be deciding whether or not, they haven't yet, okay, whether or not to leave the market. So if they do, it's a hangman. The pattern is hung, which means there'll be a correction. How much of a correction, we don't know if that happens. It hasn't happened yet, but that is part of the psychology behind a hangman. Given these two criteria, when a hangman forms in an uptrend, it indicates that buyers have lost their strength, while the demand has been pushing the stock price higher. On this day, there was significant selling, while buyers managed to bring the price back to near the open. The initial sell-off is an indication that a growing number of investors think the price has peaked. For believers in candlestick trading, the pattern provides an opportunity to sell existing long positions or even go short in an anticipation of price decline. The hanging man is characterized by a small body on the top of a long lower shadow. The shadow underneath should be at least twice the length of the body. Okay, so this is the lower shadow. Is the lower shadow twice the length of the body? Yes, it is. Let's see. The body is black or red, so they use black. My candle is red. If the stock closed lower, body is white or green if it closed higher. Now that's a variable. You can use any color on a chart, by the way. But it just so happens I do use red on bear candles and green on bull candles, typically. But those colors can be changed on your chart. The chart below shows two hanging man patterns in Facebook Incorporated, both of which lead to at least short-term moves lower in the price. The long-term direction of the asset was unaffected, as hanging man patterns are only useful for gauging short-term momentum and price changes. So back here you see a hanging man followed by a downtrend, but the overall uptrend continued to move up in Facebook here. And then you see another hangman right here, and it moved down. And in both of these cases, they were just corrections. They weren't reversals. They were temporary reversals, but they weren't complete reversals. So another thing that I use when I see something like this is I'll get out Fibonacci retracements, okay, and start analyzing a pattern. So if this turns out to be a correction, we will try to guess how far down. I drew that backwards. The 100%, in my opinion, should be down here, because we're trying to see if this section will retrace to this bottom by 100%, or will it go down here. And interesting. That's interesting. How I drew that, the 618 is right around where the gap occurred. Interesting, interesting. There is a possibility that this gap will close to the 618 and then go back up, or it might continue to go lower. We do not know. We do not know the future yet. This could make a new high. We just do not know. NASDAQ 100 stock analysis. We're looking at a hangman. So, back to the Facebook example. Even though traders often count on candlestick formations to detect movement of individual stocks, it is also appropriate to look for candlestick patterns in indexes such as the S&P 500 or Dow Jones Industrial Average. Candlesticks can also be used to monitor momentum and price action in other asset classes, including currencies or futures. Look, I trade them all. It depends on where the pattern is, then I look. Distinguishing features. If it is an actual hanging man pattern, the lower shadow is at least 2 times as long as the body. In other words, the traders want to see that long lower shadow to verify the seller stepped in aggressively at some point during the formation of that candle. Thomas Bolkowski's Encyclopedia of Candlestick Charts suggests the longer the lower shadow, the more meaningful the pattern becomes. Using historical market data, he studied some 20,000 hanging man shapes. In most cases, those elongated shadows outperform those with shorter ones. Some traders will also look for strong trading volume. Bolkowski's research supports this view. Of the many candlesticks he analyzed, those with heavier trading volume were better predictors of the price moving lower than those with lower volume. Another distinguishing feature is the presence of a confirmation candle the day after a hanging man appears. Since the hanging man indicates at a price drop, hints at a price drop, the signal should be confirmed by a price drop the next day. That may come by way of gap lower or the price simply moving down the next day, lower close than the hanging man close. According to Bolkowski, such currencies foreshadow a further pricing reversal of up to 70% of the time. So let's look at this before reading on. This is closing below where it opened, but it's still forming. So if this were to close there, this candle right here confirms the hanging man. Okay, it doesn't matter if it goes really low or if it just closes lower. Okay, let's see what that says again. See what it says again. Another distinguishing feature is the presence of a confirmation candle the day after a hanging man appears. Since the hanging man hints at a price drop, the signal should be confirmed by a price drop the next day. That may come by way of a gap lower or the price simply moving down the next day, and it says in parentheses, lower close than the hanging man close. Okay, so let's look at it again. Our close is right here, right where it's trading at. So if it closed there, it would confirm, but barely. It would barely confirm. Now, if it closes down here, it would for sure confirm that hangman. And it's saying that 70% of the time, it leads to a, not a complete reversal, but we'll have some correction action that if you're a swift trader, you might be able to make some money off of. I'm already trading it, so. According to Bolkowski, such occurrences foreshadow a future pricing reversal up to 70% of the time. So that means after it's confirmed. It has not been confirmed yet, okay? That candle is in pre-market, and we have a full day's worth of trading to go yet. It's worth noting that the color of the hanging man's real body isn't of concern. All that matters is that the real body is relatively small compared to the lower shadow. That's all that matters, is what it's saying. So that to me is definitely a hanging man. Trading the hanging man. The hanging man patterns that have above average volume, long lower shadows, and are followed by a selling day have the best chance of resulting in the price moving lower. Therefore, it follows that these are ideal patterns to trade off of. Upon seeing such a pattern, consider initiating a short trade near the close of the down day following the hanging man. So it's saying to wait for confirmation on the next day. So that's today. So technically would be tomorrow, because we have to get the rest of the data. I'm already in because I'm an aggressive trader and I don't want to be left out of the move. So the market in the US hasn't even opened, but I'm already short. A more aggressive strategy is to take a trade near the closing price of the hanging man. That's what I did. Or near the open of the next candle. Place a stop loss order above the high of the hanging man candle. Okay, that's really old school stuff. I personally trade options and I don't have stop losses because I'm limited by the loss of the option. So I'm not trading the actual stock, I'm trading the option, and the option, if it's not in the money, will expire worthless. The following chart shows the possible entries as well as stop loss location. So you could go check out Investopedia.com. The article is written by Daniel Kurt. You could have all that information, the bookmark for your own references, and check out their other information. They have a how to trade options guide advertisement there, and looks like a pretty good site for traders. Um, I sell myself as well, but I have no problem promoting other good stuff. So this has helped me understand the hangman a little better and helped other people listening. Um, so I don't think I need to really read any more of that, but you could check out the rest and read it yourself and develop your own interpretation. But it looks like a hangman to me. Thank you, Investopedia.com and Daniel Kurt. Let's see what else we can look at. How to trade reversals with the hanging man pattern. I don't really feel like reading any more articles. There's a picture of a hanging man there. We're looking at dailyfx.com. You could go check them out as well. Just Google hangman pattern dailyfx. There you go. You can look, and there they're using a looks like an RSI signal on their chart. It probably is. Let's see if it is a RSI. Not going to tell me, is it? Yeah, there it is, RSI. So anyway, it's showing that the RSI is showing overbought when their hangman occurred, and then afterwards they show it going down. Hangman candlestick, there they show a pattern that looks like a hangman, but it's really not at the top of the pattern. They probably have their reasoning. There's probably other verifications. So sometimes it's not cut and dry and clear. So what else do we have? Shall we look at some other websites? I would like to know more about the volume. Usually I don't really use volume in my trade analysis. Like this, I don't really use it. I use like generally I first look, I use other indicators and I do use volume, but I don't use it to confirm patterns. If the pattern is so blunt and in my face like that, there's a gap up and then there's the actual chart pattern. I follow the chart pattern and the chart action, and like it says to follow the next day's pattern. I find that more informative, the actual price, than indicators, which can be deceptive in some cases, but not always. Because sometimes you could look for too much evidence and talk yourself out of a good trade. I mean, look at that. It's going down some more just as we study this. And I mean, it is totally worth totally doing your research and understanding so you can go back and look at you could go back and look at patterns and see the psychology behind the technical analysis, and um, there you have, like, this is like totally a downtrend and then there's a correction, but there's a hangman inside the correction. So you're kind of like trading with the trend. In this case, in this example, it's showing an example, and then it's showing, I guess it looks like low volume. I don't know. I think that's low volume in this case because the chart shows a price decline followed by a short-term rise in prices where a hangman candle forms. Following the hangman, the price drops on the candle, on the next candle, providing the confirmation needed to complete the pattern. During or after the confirmation candle, traders could enter short trades. The example highlights that the hanging man doesn't need to come after a prolonged advance. Rather, it can potentially mark the end of a short-term rally within a longer-term downtrend. So that's why I don't like get too much into it, because if you see the pattern and the price action, it's clearly something that's going on that didn't happen before. So you don't really have to, like, you know, it's kind of like if someone sideswipes you on the road, they sideswipe you on the road. It doesn't matter all the other variables, whether it's raining or not, or all this other stuff happening. It just happens. It has happened. So there it's showing that you can either have a green candle or you can have a red candle. You could have a candle that closed bullish, and you can have a candle that closed bearish. And as long as you got a shadow at the top of a trend with a candle and a short body, that is a hangman, as long as it's at the top of some type of trend. How many candles um, before this occurs is subjective, apparently. It is at your discretion and how you do analysis. Oh, I like this this drawing here. This is by commodity.com, and they have a actual chart, I guess, of Alcoa. It's an actual pattern, but then they have it all labeled. They have number 1 is uptrend, 2 is the gap up. There's a gap up, and 4 is the real body, which is bullish, a bullish hanging man candle, but it's a bearish indication. And so 5 says it's the 5, number 5 is the bear candle, which actually gapped down in this case, which was a super bearish candle following it. It doesn't mean that could be market congestion too. It just could be volatility. So just because you see a very enthusiastic candle following a hangman doesn't mean it'll continue to go down either, okay? There's no guarantees. I mean, we could have like a wimpy day today because maybe there's no fundamental news and there's just not a lot of fear in the market, but maybe it'll close here and then the next day it could close the gap all in one move, or it could go up. We don't know. It's all subjective, you know. We don't know. We do not know yet. We're speculators. This is just an evidence of weakness in the chart. So, and it is part of the market psychology. This is candlescanner.com, and they actually have a Japanese name for this. So this is probably is the hangman probably is an original Japanese candlestick. Kubitsuri. Now, I don't speak Japanese, so I probably said that wrong. I probably butchered it. It says forecast bearish reversal, trend prior to the pattern, uptrend, opposite pattern. The opposite pattern is a hammer. I could say hammer. I could say hangman, but I can't say that. Here we go. Maybe they're going to tell us some volume. So here, in this case, they're showing volume. And although they're not talking about the volume, hanging man pattern may be formed in the second line of other patterns, such as a bearish harami. So this can be part of this pattern, the bearish harami. I probably am saying that wrong, but apparently there's a harami. You say tomato, I say tomato. Potato. Sacramento, tomato. Here they have some efficiency statistics at candlescanner.com, and they, depending on how many candlesticks tested, they have a candlesticks testing period. The one with 10 candlesticks, and then they have the one with 5 candlesticks. And interesting. So, hmm. And they also have best performing symbols for this candlestick pattern. Interesting. Interesting. So, article by Jack Lampert, Lampart, candlescanner.com. That looks like an interesting article. I might check it out later. And the same website also referenced Bearish Harami. So, interesting. I'm really not going to go into that. This one is by Trade Pro Academy. So, yep, this is the close price in a bear candle. This is the open price. This is the highest price, and this is the lowest price. So that's what makes up the candle parts. But let's see. I don't think this website's really going to be all that helpful, so we're going to skip it. Okay, let's check out this guy's video. So this is www.financialspreadbetting.com and UK spread betting. I'm going to subscribe and check out his candle and listen to his video
Hey guys,
channel.
welcome back. So in this video series we're talking about candlestick patterns, and in this particular video I'm talking about the hanging man pattern, similar to the hammer in terms of its shape but in a different position. Let's have a look at it. So this is what you get. You get a decent sized tail and you get a kind of smaller body. Now officially, there's probably some official line in the textbook that says that tail's got to be X% of the body to be an official hanging man strategy. Let me get my red pen and green pen out so we can colour these in. So they can either be red or green, but let's talk about the psychology behind it, because that's the important thing. And with all these things, guys, you know, let me know what you think about these patterns, whether you think they're any good, whether you think they're not, and how you integrate them with your own trading. So a hammer is reverse. We've got the downtrend, we get this pattern at the lows, and it makes a lot of sense, the logic of it. A hanging man is that you've got to push up to the upside, and then you get this pattern. So what is the theory behind it? Well, the theory is that generally, should I say, you get a sell-off in the early part of the day. So in other words, you're in an uptrend already, okay, you've got strength and you're looking for some kind of reversal. Then you see a sell-off in the early part of the morning, or whatever it may be, up until around midday. That then recovers and closes perhaps near the highs. Now obviously, if you've got a red body, that's going to be your open here, and that's going to be your close here. And obviously if there's a green body, then it's vice versa. There's your open and there's your close. The shape of the body, textbooks may well change it, but as far as I'm concerned, the actual difference between those two isn't so relevant. Obviously, a stronger candle is going to be one with a close. This may be better for you from a hanging man perspective, so that's to be a black candle or a red candle. But really what you're looking at is what's happened intraday, and that's the good thing about candlestick patterns, is they're telling you what's happened intraday in a brief summary, so you don't have to look at the chart, but you can see and theorize exactly what's going on. Generally that's going to be that intraday you've had a sell-off and it's pushed back up and it's kind of closed near the open. Now whether that happens to be red and you've closed below the open, or whether it's green and you've closed above it, that's obviously a little bit more bearish slightly, but the whole...
Oh, there goes my internet. That's the whole deal when you're on satellite. You don't get as I'm way out here in the middle of the desert, so apparently it doesn't want to play a nice smooth video. So I'm going to let it load for a bit and then restart. But there is a lot of psychology behind the hanging man pattern, and even the open and close, and where it occurred and how it occurred, and you can just see all the emotion on the chart. So it is quite amazing. And while that's loading, I'll give some attributes. I subscribed to him just now. That's UK spread betting. Hanging man reversal charts pattern. I'll also like his video.
Point is this action here, this sell-off. That is indicating potentially that after we've had this steady uptrend for a long way, several days, that sentiment may well be changing. The sell-off has happened, sellers have happened. Yes, the buyers have overcome it, and it's managed to push it back to highs, giving you that classical pattern shape on the candlestick. However, the presence of those sellers initially is enough to say, hey, we could be at the top here, we could be reversing. That sell-off there may well be the start of something bigger. So the idea is that you're selling that. It's a bearish pattern after you've had an uptrend. And the same with all of these patterns, guys, is that what happens before is just as important as this pattern here. That candlestick positioned anywhere in a range or anything is completely meaningless. It's irrelevant. Nobody cares about it. If you're in a brutal uptrend and you start to see that, then maybe you can start to position for the short side, or maybe you can start to lean on the short side, unwind your long positions, scale out of something or start scaling into your shorts and that kind of thing. And if we look at the official definition here, it actually, for the anatomy, because this is the textbook thing, guys, I'm not really a huge fan of saying it's got to be exactly this. There's obviously preferences that we'd like to see and wouldn't like to see, and discussed in the other video with the hammer that I like to see a good tail, because that indicates kind of a reversal. Maybe a longer tail for me personally is quite good because it shows a little bit more aggression to the sellers. But here in Investopedia it's saying that the candle should have a small body near the top of the candle, a large tail or lower shell. It should be at least twice the size of the body. And just as we've said here, the candle can be green or red. A red candle close is considered more bearish. So the official line, if you like, is that it's twice the size of the body. So in other words, that's got to be twice the size of that to be an official hanging man. Do you think that matters? Let me know in the comments below whether that's important, whether you think it's got to be double, whether you think you can get away with being smaller, or whether it's got to be more than that. I'd love to hear what your thoughts on this. And if you use this strategy regularly, or this candlestick pattern regularly in your trading, day trading, swing trading, again, let me know if you've got any tips or tricks.
Okay, so like my own opinion is that the tail does and it doesn't matter. What is the key here in this case is that it gapped up and that it had trouble moving higher, and this is a decision candle, okay, meaning that this body here is small. You have a small body, so the price is the main trading area, meaning the body. It's not giving you a clue one way or another. But with the hangman, they say that the importance of this shadow is that it's kind of like a probe looking down for support. It's looking for support because this area wasn't sustainable apparently. So it does matter, but it doesn't matter. If you didn't see the tail and you just saw this, and then you saw this candle too, this would still be a bearish pattern, because there's definitely resistance and indecision here. So this is all very ugly looking for the uptrend, even though it gapped up and there's this massive gain in price, record highs. It's also a sign of weakness.